In this video, we will address the following topics: the mandatory flood insurance purchase requirement for certain structures in the special flood hazard area, what can and cannot be insured through flood insurance policies, and minimum and maximum flood insurance coverage limits. These key terms and acronyms will be used during this presentation. You can find the terms and their definitions at the web address on screen. In the early years of the National Flood Insurance Program, very few communities participated in the NFIP, and many owners of flood-prone properties chose not to purchase flood insurance. Instead, they relied on federal disaster assistance to pay for their recovery. The Flood Disaster Protection Act of 1973 helped change this. The Act mandates that federally regulated, supervised, or insured financial institutions and federal agency lenders require borrowers to purchase flood insurance for buildings located in the special flood hazard area of a community participating in the NFIP. The National Flood Insurance Reform Act of 1994 further reinforced this requirement by establishing penalties for mortgage lenders that do not comply with the 1973 Act's mandatory flood purchase requirement. It is the responsibility of lenders to use the current effective flood insurance rate maps to determine whether a building is in a special flood hazard area and therefore subject to the mandatory purchase requirement. Although not required by the NFIP, some financial institutions require flood insurance for properties located outside the special flood hazard area as part of their own risk management process. Lenders make this decision based on the lender's potential exposure to flood risks. Studies have shown that more than 20% of NFIP claims come from losses to properties located outside of the mapped special flood hazard area. Flood insurance can be purchased to protect two types of insurable property: buildings and the contents located within insurable buildings. Insurance policies for buildings and contents can be purchased separately. The mandatory purchase requirement discussed previously applies to buildings and also to any building contents used as collateral for the loan. That being said, FEMA encourages people to purchase both types of coverage even when it is not required as a condition of a loan transaction. A building eligible to be insured under the NFIP is a structure that is principally above ground and affixed to a permanent site. 51% of the value of the structure must be above ground. The structure must also have 2 or more outside rigid walls and a fully secured roof. With few exceptions, flood insurance cannot be purchased for buildings located entirely over water. Manufactured homes that are affixed and anchored to a permanent foundation are considered buildings and are eligible for coverage. Building coverage includes the insured building and its foundation elements, the electrical and plumbing system, utility equipment such as furnaces, water heaters, and central air conditioning equipment, large appliances such as refrigerators and cooking stoves, and built-in appliances such as dishwashers, and permanently installed carpeting over unfinished flooring. Up to 10% of the coverage amount of a standard dwelling policy can be applied to detached garages. However, this does not apply to any detached garage being used for residential, business, or farming purposes. These and other types of accessory structures may be insured under a separate policy. Flood insurance can be purchased for personal belongings located within an insurable building. This is commonly referred to as contents coverage. Contents coverage includes such items as clothing, furniture, and electronic equipment, curtains, portable and window air conditioners, portable microwaves and dishwashers, carpeting that is not already included in property coverage, and clothing washers and dryers. Renters can insure the contents of an eligible building, even if the owner of the building has not insured the building itself. business owners can also purchase contents coverage for their machinery, equipment, stock, and other property used in their business. NFIP flood insurance covers only buildings and contents. It does not cover land, property, and belongings outside of a building such as trees, plants, driveways, sidewalks, wells, septic systems, decks, patios, fences, seawalls, hot tubs, or swimming pools, or most self-propelled vehicles such as cars and motorcycles. Other losses specifically excluded from flood insurance coverage include animals and livestock, licensed vehicles, currency, precious metals, and valuable papers such as stock certificates, living expenses such as temporary housing, damages caused by moisture, mildew, or mold that could have been avoided by the property owner, and financial losses caused by business interruption or loss of use of insured property. Under the NFIP, a basement is any area of the building, including any sunken room or sunken portion of a room that has its floor below ground level on all sides. At one time, the NFIP provided full coverage for items located in basement areas of buildings. However, a 1982 study performed by the Federal Insurance Administration determined that while policies for buildings with basements accounted for less than 16% of all flood insurance policies, they were responsible for the majority of losses. Since October 1, 1983, coverage for basements has been limited to specific items. Building coverage in basements generally is limited to foundation elements, essential building equipment such as the furnace, water heaters, water softeners, central air conditioners, and heat pumps, electrical wiring and circuit breaker boxes, and fiberglass insulation and unfinished drywall and sheetrock. For a complete list of basement items covered by building coverage, viewers should review the NFIP Standard Flood Insurance Policy available at the web address on screen. If contents coverage is purchased, the washer, dryer, and food freezer located in the basement are also covered. However, personal belongings such as furniture or electronic equipment located in a basement, or improvements made to basements such as carpeting, finished walls, floors, or ceilings, are not covered under either building or contents coverage. People are often surprised to learn that the coverage limitations that apply to basements do not apply to what is typically referred to in the Midwest as a walkout basement. This is because, unlike a basement, the floor of the typical walkout is not below grade on all four sides and has at least one outside door opening onto ground that is at or below the finished floor level. Coverage limitations also apply to enclosures used to elevate the lowest floor of the structure above the base flood elevation. As discussed in Video 15, these enclosures must be constructed using materials resistant to flood damage, must incorporate vents that allow floodwaters to automatically enter and exit the enclosure, and must be unfinished and used solely for low-damage potential uses. Additionally, any utilities such as furnaces, electrical circuit breakers, and water heaters that are located in the enclosure must be elevated at least 1 foot above base flood elevation. Because the community's floodplain regulations restrict the design and use of these enclosures, flood insurance coverage is generally limited to foundation elements, essential building equipment such as the furnace, water heater, water softener, central air conditioner, and heat pump, and electrical wiring and circuit breaker boxes. If flood insurance is required by a lender through the mandatory purchase requirement, then at a minimum, the building coverage purchased must be at least equal to the lesser of the outstanding principal balance of the loan, the total insurable value of the property, or the maximum coverage limits available under the NFIP. However, the lender has the discretion of requiring more than the minimum amount of coverage required by the mandatory purchase requirement. Of course, there is no minimum coverage amount required if flood insurance is being purchased voluntarily. As of 2013, NFIP's maximum building coverage limits are $250,000 per unit for residential buildings and $500,000 for non-residential buildings. Maximum coverage limits for contents are $100,000 per unit for the contents of a residential building and $500,000 for the contents of a non-residential building. Additional coverage above the maximum set by the NFIP may be purchased from a number of private insurance companies. The value of flood damage losses to structures can be calculated based on either replacement cost value or actual cash value. Replacement cost value is the actual cost to replace or restore that portion of the property that was damaged. To be eligible for replacement cost coverage, the structure must be a single-family dwelling, the policyholder's principal residence, and must be insured at the time of the loss for at least 80% of the building's replacement cost, or the maximum coverage available, whichever is less. Replacement cost value is also available for residential condominium buildings. The value for all other losses, meaning losses to structures that do not qualify for replacement cost coverage, and all losses for contents, are reimbursed based on actual cash value, which is the replacement cost value at the time of loss minus the value of physical depreciation. Some building items that experience rapid depreciation, such as carpeting, are always reimbursed on an actual cash value basis, even if the building itself otherwise qualifies for replacement cost coverage. Today, you have learned about the mandatory flood insurance purchase requirement, what can and cannot be insured through flood insurance policies, and minimum and maximum flood insurance coverage limits under the NFIP.